Guys, it's Will here. Going to go through the markets again. If you looked at my past videos, you see that I've been predicting, or not predicting, but mentioning the downtrend. And so it was fairly obvious to me, for various reasons. If I use since we use charts and technical analysis, you can look at the break below the 50. You have this new lower high here, right there. So you got a high here and then one here. So, and I use, you can see the momentum crossing down below zero. Red volatility stops, which are usually negative areas, or like areas where you might short. So there's lots of signs that this was happening. You don't know that it's going to drop like that, but once you're down and once you're heading down, there's you don't want to really jump in at that point. So you get these little pullbacks, these little rallies here, but it doesn't really last. So one thing you can do, there's a black line here. It's called the 8 EMA, exponential moving average. So when you get a rebound, usually it will bounce. So one way, you have the 3 is the green. You can wait for the 3 to cross up again. And so you can see how it never got up above the 8. It doesn't work 100% of time, of course, but a lot of times this stuff will trick you into, when I see this rebound, I look at the momentum and I still see it heading down. I'm not going to jump in. Plus the red volatility stops, so it keeps me out of this type of stuff. But then you think, well, is it going to support at the 200? It went right through that. Is it going to support at this previous spot? Not really. Yesterday you had this huge rebound, unbelievable. Like it started here, gap down, all the way down, and pushed way back up. That can be a reversal sign. And you're way down, like below momentum. So we're in an area where you're going to see probably, a rebound, but whether that can sustain itself or not. So I don't like I'm not like buying dips and things like that. I'm waiting for signs of uptrends. So I look back when you're up above, usually in an uptrend above the 50, with new higher highs and higher lows. So this area is not really an area that I can get involved in terms of uptrends. S&P 500, same thing, broke below the 200. It's close to a support level. You're way down here, so there's obviously a chance, and it's very vertical. When you see these vertical drops, it's a motion, it's parabolic, and that'll tend to reverse itself. But right now, it's not where I need it to be. So you look back at previous areas and see what it looks like. You see these lines; these are higher lows. We're heading up or above the 50. It's a nice, smooth movement. Now we have huge candles and volatility. So until this gets settled out with the the Fed and the interest rates, it's not a great position here. IWM is really horrible. It's been in a flat consolidating period, and then it broke below that. So now you're way down here. So this is awful. But like I said, these are parabolic vertical moves. So it tends to rebound from that, but because it's too extreme of a drop. Dow Jones, kind of near a support point. It went way down here, back up again. It's sort of hovering at this multi-point support. You see when you have this downtrend like this in the momentum that it can turn around fairly quickly here. So, and with the, this is oversold stochastics. We're also way down low. So it's bound for a bounce, but who knows how far that'll get you. If you were looking at Canadian, that was doing better because it had oil and gas and gold, metals and stuff like that, resources. It did sort of bounce close to the 200 or this previous low. But none of these look like the way I want to trade. I want to be trading in an uptrend here, an upswing trade like this. Green volatility stops, upward momentum crossing over the zero line in an uptrend here. So this does not look like what I want it to be. So that's just how I do things. If we look at, I did a scan sort of for above the V-stop 50-day and not much really came up. You've got gold potentially. You know, obviously it's an up and down thing, and it's been very disappointing. But there is a chance that this will start to go up especially if interest rates go up. But you know, it's been something that really disappoints people over time. So, and there's a lot of resistance, but you are breaking out a little bit of this wedge here. But you can see when it broke through here, it came right back down. So we'll see what happens, but this is promising. And also the platinum and palladium, it's a bit steep here, but, and there's a 200-day sloping down, which is kind of, will be resistance. But there is this higher lows here and possibility of, you know, increased increased trend here if that continues. But you know, like I said, the 200's there, and it could act as resistance. So sometimes you might get something in here and then trade it up to the 200, see what happens. Once you break through the 200, then you can get back in again. But these are like obvious points where like you can bounce here if you got in and it bounced off the 50 and just kind of went way down from there. So, but these are a little more volatile, like the resources and stuff. So it's not the best area a lot of times to get into, but we're at this point potentially with interest rates and things. We'll see what happens. I'm not sure they can really raise rates that much without causing major problems, but people do anticipate that right now. So it's quite a volatile market. So hopefully that helps. So we'll talk to you. Oh yeah, I want to mention if you want TC2000, this is the software. You can get a free trial or $25 off purchase in the link in the description below. I've got the gold plan and real-time US data, so I don't have to wait like 50-minute delay. And I'm seeing right now like pre-market values for a lot of stuff. Like for the markets, this is 8:26 a.m. so I can see what's happening. If I go to 10-minute, there's a gray section. This is pre-market and post-market, so you can see what happens with the pre and post-market. So we shall talk to you in the next video.